traders at UBA say investors are adopting a wait-and-see approach as they focus on the outcome of today's 337.89 billion Naira T-bills auction. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me now for more market updates. Chuka, thank you so much for joining us on the show today. Let's talk about the highlights of market movements we've seen so far from Monday up until today, where we are seeing the primary market auction unfold.
Thank you, David. The week started with liquidity constraint. We've seen the system liquidity drop as low as yesterday opened at 612. Today is currently about 1 trillion. So you see that the system is highly tight. That has actually affected trading. Another reason for the quiet trading activity we've seen so far is also the NTB auction today, where over 337 billion is on offer. The last auction, which was last week, we saw over 256 billion was offered, and then well over 1.5 trillion was sold. Rates was also maintained at 19% for the longer tenure. So today, trading has been very quiet, like I said earlier, due to the NTB auction.
And talking about auctions to come as well now, the sizes here are gradually coming back to the 300 million, 360 thereabout range, juxtaposing that to what we saw earlier pan out in January and even in February. Are we seeing a slimmer margin here?
In terms of rate or in terms of volume?
In terms of volume.
Okay, so we've seen. So what we've seen so far is that the DMO has continued to, sell more than what is being offered. Like I mentioned earlier, last auction, over 256 billion was offered, and well over 1.5 trillion was sold. It all boils down to the fact that the government is looking to borrow heavily due to to be able to fund the budget deficit. So far, the local market is what is available right now, as nothing yet has been said about borrowing externally, especially with Eurobond. So we continue to see this high volume of oversold in these auctions, and then of course also the inflation figures are on the high. And then yields are quite attractive at this time. So in order for government to be able to attract more investors into the fixed income market, they have to, maintain these elevated yield levels.
Yes, definitely. And we've also heard from the Central Bank of Nigeria governor as well, when he was mentioning that we should likely see stock rates also move closer to the MPR rate of that we have presently now, and also talking about the volumes of OMO auctions we'll see, and then in terms of mopping up liquidity. But now let's talk about what to expect for the month of March. It's still early days here.
So the auction today, we expect to see the result probably in the next 1 or 2 hours. We expect to see rates close around between 21.5 to 22 levels. That's for the longer end of the curve. Going into the week, this level of quietness will persist, especially with the high liquidity, tightness in the liquidity, except something magical happens and the system becomes liquid, then we can see much improved activity. However, on the bond side as well as on the T-bill side, there will probably we see we see sell-off. Most banks will obviously have to create liquidity somewhat and probably sell some of their securities in order to make liquidity available.
And Chuka, still doing a retrospective look at some of the high points of the meeting at last week's MPC as well. There were a whole lot of reactions saying that we'll see the Naira gradually appreciate, but that's not what's manifesting so far this week. We're seeing the Naira depreciate now to about 1,602 levels as at close yesterday.
Yes, so the thing is the outcome of MPC meeting and then some of the communique, and then of course some of the policies that the CBN has rolled out, is not an overnight thing. Obviously, it will take time. Gradually, CBN has increased the rate, the volume of intervention in the market, and that obviously we start seeing results, but not immediately. Don't forget that the huge demand is still huge. The amount of demand, like I said earlier, is quite much, and then of course the level of intervention is not as much as the demand. But again, part of the policy, like for example, the NOP policy, the policy as regards the BDC, are all geared towards keeping the system liquid. And as long as the system continues to be liquid, we will see decrease in the rates, but not almost immediate. That also plays out on the fixed income activity on the fixed income side, especially on the OMO side. The essence of this OMO, elevated yield in the OMO side is to also encourage FPI to come in and then bring in this needed dollars. So this, will continue gradually. It's not going to be an overnight results, but gradually with persistence, we'll continue intervention by CBN. We will definitely see a reduction in rates soon.
And talking about the inflows of FPI is expected as well. We're seeing the president continue to also sell Nigeria. The latest on the table, we have talks between Nigeria and Qatar. But we'll leave the conversation here for now and continue to monitor market movements. Chuka, thank you so much for your time on the show today. That was Chuka Nwachukwu, head of ALM and balance sheet management at UBA.